Welcome to the Kendall Report. Another week has gone by. I warned you early in the week that I thought most of the volatility would be after Wednesday as we came into the reports on Wednesday and Thursday, and that certainly was the case. We saw a huge amount of volatility yesterday with a big decline as markets just collapsed based on the reaction to the CPI numbers. We come in today, we get PPI, they come in really hot. Year over year, 6.2, month over month, 0.8. The expectation was for a 0.3. No one cared. Markets did back off a little bit. Then the news came from the CDC that it was okay to basically live. So that triggered the market. We got a really solid bid in the markets, and it continued throughout the day and moved much higher in the pattern as the markets finished off the highs but near the higher levels of the day. Overnight, we're seeing a bid in the markets again. We're up about 0.4 plus on the S&P. As we look back on yesterday, jobless claims came in better than expected to 473. I think it was down around 34,000. And then that continuing claims number is just stuck at 3.65 million. I don't see any change in this number coming in anytime soon. As we come into Friday, we've got retail sales coming out, and that's expected to show a 2.2% increase. This is going to be a pretty sensitive number. My expectation is that we'll see it come in probably better than expected, so this bid that we saw will continue in the markets. The final thing that I want to talk about before going into the technical section is a brief overview of what happened in our database. Now, in spite of the big run back up, we still saw a small net selling. As we come into Friday, we run our intermediate models. They're still 73% bullish. I do expect to see some selling in the intermediate models, but nothing really material. I'll talk about that when I review the database here in a few minutes. But as we close out this week, it's going to be interesting because we traded down below some key levels. 40-day moving average to 10-week moving average was challenged, and now we're back above those. And as long as we stay above those levels, I talked about this, this is going to keep the markets in a sideways with a bias to the upside for a while yet. So let's go ahead and take a look at the charts and see how Friday's set up. As I review the WaveTech database, as I mentioned in the opening comments, we did see a net selling in the models. There were 432 sell signals, 255 buy signals. So it's basically a rotation with a slight negative. We're at 27.75% bullish right now. And what I'm expecting from this database, if we're able to remain above some of the support levels that I'll cover in the technicals here in a minute, we should see the database stabilize somewhere around here. It should stay above 22% bullish. It should start to grind out, and this is a very positive event. The reset that we saw from the sell-off the other day actually suggests that we're resetting all of the patterns that are out there. Now we're tracking 16,390 stocks in here. We're down to 4,500 of them actually being long, so we've actually had about 9,400 sell signals over the last several days. So just to explain what's going on with those 9,000 symbols, actually what was happening, a lot of symbols that were long since early March were the ones being exited. So the fact that it responded to this big sell-off doesn't mean that all of those symbols were losing. It's actually taking profits. As I look at some of the sectors here, you'll see that there's only one sector currently long. And as I pop up the chart on this, you'll see that it's been long since almost in January from a sector viewpoint on this one. But many of these look very similar. This is the financial sector. And what you'll see here is that it's been multiple buy signals going back to the fall of last year. So there was a buy signal, then it exited, bought, exited. We've had 3 buys, and the last buy was in early April, and it's exited. And a lot of these trades look like this, even on individual stocks, where there was even a small gain, a small loss, or a substantial gain actually taken. So what will happen now with all of these charts, they're going to have to recycle all of the PPMs will recycle, short-term trends will start to come back into play, and then we'll go through the same scenario that we've been through. And this chart actually illustrates exactly what's been going on since last September and October, as we've seen the short-term database rotate in and out 3 times during the cycle. On Sunday night, I'll review the intermediate database, and you'll see there that a lot of these trades have been on since August, September, and November, and they still have a long ways to go, so the intermediate trends are still in place. This is what we're seeing from the database, which is very dynamic and is following over 16,000 symbols. So we see this rotation happen within trends all the time. From an intermediate standpoint, we're about halfway, maybe a touch more, through that intermediate trend right now. Typically, they'll last for about a year, and like I said, a lot of these came in last July to September, so we're going to go through the summer and most likely see some of those things happen. As far as the Sunday night database rotation, I do expect to see some selling. I believe we'll stay above 68%. We could drop down around 62%. That would be actually fairly healthy, and we start to see a rotation. The other thing that can happen with the database on an intermediate level is that you see a rotation on a larger scale, so some of these intermediate patterns will start to recycle as well. So I'll cover that as we go forward in the next several weeks. As we begin with the S&P 500 futures, as I mentioned in yesterday's video, we did get an STX buy signal. We saw a nice rally. We did trade down, though, into a new low. We traded below that 4060 number that I talked about that I thought would be substantial, as we did see a low yesterday of 4029. So we spiked below that and then reversed, and we actually had about a 100-point rally all the way up to the 27 level. We actually went to a S2 to a R3 level. The other thing I want to note here is that the PPMs have turned back up. We are actually gotten into a trend mode there for about 2 sessions, and we're back into a neutral mode. Now it looks like we're going to be sandwiched between the 40-day moving average and the 21-day moving average and the 10. They're all clustered together there, so the range is likely to be 4095 to 4160. As we look at the market grid for today, you'll see that the low so far is 4105. We have not seen an S1. That's 4085. It's very possible that we will see some selling early in the morning, see the market back off into an S1. We're likely to see an S1 R2 for today. 4153 would be the upside extreme. We're up 23 handles right now. Market's actually gotten a little stronger over the last hour. We are seeing go into a neutral pattern. The acceleration downside event that a lot of folks were talking about is not going to happen. I actually thought we would hold around that 4086 number. And like I said, we did trigger down to the 4029 level for a few minutes yesterday, but rallied way back above there. Right now we're 4129.50. As we look at the S&P cash, we did get the STX buy signal yesterday, and we traded all the way up to the extreme on the market grid yesterday. The high, the RXT number 4121, the high was 4131, and we closed at 4112. So we did not get an RXT sell signal. As we look at the market grid for today, we're looking at an S1 R2 that would suggest a 4097 low, with a possibility of going to R2 at 4143. I don't suspect we'll be able to get above that 4159 level, which would be a move back into the moving averages. It's certainly possible, but for sure S1 should be the extreme if we do get some negative numbers for today, and R2 should be the high, with the possibility of going to R3, which would be a test of that 21 and 10 and 21 period moving averages. As I take a look at the weekly S&P cash, see we're substantially underneath the STX number at 4156. If we do get back above that, then that will not trigger an STX weekly buy, but it looks like there's a fairly good chance that we're going to stay below 41.56, get an STX buy, which would suggest we'd probably back up toward the 41.94, 42.14 level. So just like that, we'd be back at 42.14. I don't see this thing just reversing going up. I think, well, as I mentioned when I covered the database a few minutes ago, we're going to see some rotation, and it's going to take at least an 8 to 12 days before we'll start to see any real positive rotation in the database. That's something I'll update you on as we go through the next several days. Next market I'll cover is the NASDAQ futures. They're up 81 handles, up 0.62 overnight, 13,181. I know I did set up early in the week. I thought we were going to get up to around the 13.9 level. That obviously didn't happen, but it all started with that key reversal that we had on the S&P a few days ago, and of course with the news on Wednesday with the CPI. And we did satisfy on the S&P that 3-day trade, so that worked out pretty good. But now we're back into neutral zone. As we look at the NASDAQ, though, PPMs are starting to turn back up, but we still have a lot of negative pressure on the downside. PPM1 at a minus 0.50, and this is real-time calculating against this 81 handle move. PPM2 is in trend mode to the downside as well, so a substantial amount of resistance now, 13,410. So if we can stay stable, it will take several days for us to stabilize this market. I believe that potentially that we've seen the low of this move, and we'll start to move back toward this 13,400, maybe ultimately toward 13,500, setting up a more bullish pattern. The final market that I'll cover tonight is gold. Gold has been following the script pretty well for the last 2 weeks. The 10-period moving average at 1814 is a key level on the chart. We did spike just below it yesterday. We got down to the 1808 level, which was between S2 and S3. We reversed off of that, and we're able to close slightly higher in the session. Today, as we look at the market grid, we'll see that 1817 is S1. We've had a low of 1819, high 1827, R1 1830. I would expect to see this market move toward the R2 number at 1836.90. Looking at the weekly chart, this chart continues to form this longer term bottom. As I mentioned on Monday's video, we did get a weekly RXT sell signal, so we should be sideways for 2 weeks. That will set up the patterns. We're likely to see all the PPMs start to finish off their bottoming patterns. So it'll probably be next week or the week after that, we should be set for a pretty good rally in gold as long as we remain above this 10-pair moving average, which is the extreme support at 1765. This will complete the video for tonight. Thanks for watching. Thanks for coming to the live stream and supporting this channel. It's greatly appreciated. Thank you. Have a great weekend, everyone. Hey, everyone. Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much.